Okay, fellow traders, welcome back. It's another market review for Wednesday's trading, and I'm going to show you the possible setups that you could have been involved using the strategy. First things first, make sure your chart is set to New York time. Secondly, you want to put a line at 12 midnight for the beginning of the day's trading, and you want to add another line for 7 a.m. Once you've done that, everything on your left hand side becomes your London session. Once you've highlighted that, you want to highlight your high for the London session right here, and you want to highlight your low. You then want to highlight any fair value gaps or breaks that stick out to you. Any fair value gap or breaker that hasn't been reclaimed or touched. Reason being, price is going to use this in the New York session, in the session where we trade to either swing lower or swing higher. Okay, cool. So right here, if you watch yesterday's video, this trend right here that was played out exactly how I had anticipated. We created a low, a high, swept the liquidity on the downside, created a break. Voila. This line here just lets me know that this is a bullish breaker, so that when I switch to the 5 minutes, I'm able to see that price quickly came and touched that breaker. Let me see, did we? We didn't really. So we didn't even touch the breaker. And yeah, I don't really trade the London session. So, but if you wanted to be a part of this trade, if you're looking at the charts, let me see. So this is like the one time out of 100 times when price doesn't touch the break. It did come down, but it didn't touch it. And for gold, we usually get into the order block a little bit, but in this case we didn't. And when that happens, what do you think I'm doing? I don't trade. Because why? Then it's opening up my risk too much. The reason why I enjoy trading gold, because it can get in so close to the order block, and then I'm risking almost nothing. But this comes with time and experience. But you still could have gotten in, because why we created this breaker candle here, and price came in, traded slightly high, and then retraced right here. So the move did not stop. Low, high, quick retrace. You could have entered and aimed for the London session high. Simple as that. If price keeps on moving, I've explained this. I've explained how to manage a trade, how you babysit it until it changes on you. So price expanded all the way to the upside, leaving all these fair value gaps. Why am I highlighting these fair value gaps? Because now I know that price wants to go up. So what am I looking for? I'm looking for price to come into a fair value gap that was left while we were being bullish. And at that bullish fair value gap, I want to see what a bullish signal. Switch to the 5 minutes. What was I waiting for? Very quick trade, very small trade, but still a trade. Reason being, low, high, lower low, break in market structure, quick retracement, you enter, you aim for what? So this is when it gets a little bit advanced. So the reason why I would aim for that, because if you switch to the 15 minutes, now I want to take you through something that's going to link into this. So while price is trending higher like this here, I'm drawing out these old order blocks. Why? Because I want to see if price is going to use them to kind of make another move going lower, or it's just going to slide through them. And if it slides through them, what am I doing? Okay, didn't use it, pull it back. Then I try the next one. Oh, okay, it didn't use it, pull it back. Seems very tedious, but trust me, this is how you find your setups, because price is either going for a bullish breaker that was left in the past, a fair value gap, or it's going to sweep old highs or old lows, or it's reaching for some fair value gap. And if you have these things highlighted on your chart, then it's easy for you to just see, oh, okay, we're coming here. Now you understand what's happening, because this is a bearish order block. So what am I expecting? Price does this. I switch to my 5 minute chart. What do I see? Right there. Boom, low, high, break in market structure. That's a quick shorting position that you could have joined in right here. So we broke there, but this is only if you're watching the charts. This is how the strategy works. Everything needs to make sense. The storyline is so important. Why could you have shorted that? Because this was a bearish order block, and we reacted by doing us giving us a bearish breaker. What are you aiming for? You are aiming for the same liquidity points that you are highlighting when price it was making its way to the top. Why? Because price is going to use these points as support to swing higher or swing lower. And we are day traders, we are scalping. But at the same time, you need to understand the area that you are scalping into is a bullish area. So what do? You aim for that fair value gap and you use half of it. You don't aim for the whole thing. You measure half of the fair value gap and you take your profits. It did fill it up perfectly, but immediately after filling it, what did it do? This is what I was waiting for. This is the move I was waiting for. But then I want you to look at something else now. Getting a little bit technical and advanced, but these are the things you need to pay attention to. If price has reached a PD array and traded down into another PD array, but before trading down in that breaker, it left a fair value gap. A fair value gap is usually a perfect entry for a later time. So knowing this, my move was very small yesterday. I just traded this one move alone on gold and that was it. I just aimed for that fair value gap. That was it. That was it. Price retraced over here. Boom. That was it. That's enough because why? I understand how to use my risk management. I know how much to leverage, or I have an idea. Oh, okay, cool. Hey, this is how much I'm willing to lose. Let me put so much. And if it's a very small move, then I'm trying to go, that was done. But look what happened. Price then, after going for that fair value gap, it was too late for me. I was gone. I was out the charts. We retraced, found support right back there again. Created another low. Let me draw it out. Another low, high, low, breaking market structure right there. It's a very small one. This is the late session, so the moves are not as big in the morning. That's why I love trading in the morning, because the moves are big, they're volatile, and everything looks textbook. I love it when shit looks textbook like that there. You could have still traded here, went long, aim for what? First high, second high, and then old previous day high. So right here, so price is broken up, huge order block right there. Or breaker block, whatever you want to call it. On the 5-minute chart, what do I want to see? Look at that. Money. High. I want to see a nice little retracement, but we don't have to. But a nice little retracement, it would be good. And then I want to see it attack those highs that I was pointing to. We've already taken out this one. We aim for this one. We aim for this one. If it keeps going, you hold on and you manage the trade. If you watch my previous videos, I've showed you how to manage your trade. Sweet.